Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. We'll go through a regular agenda, market update, earnings, trades updates, and then Joe is back um, from his vacation. So we'll have Joe's comments at the end. All right, let's get started here. Big changes. You see all the indices flipped into state two. So first one, the Dow flipped and then Russell, and then yesterday SPX and NASDAQ all flipped. Yeah, big, you can see down here, yeah, we still have some of the sectors holding in there in the state ones. But over half are in bearish states now. Been having big transitions into state two a couple days in a row here. So all those state ones have been going into two. So yeah, we
Hey,
went.
Josh,
Yep.
one interesting thing about yesterday,
Hmm.
I tracked the green pie. It dropped almost 7 percentage points in one day. If you change the time machine to 4:15,
Yeah,
uh,
yeah,
that's an unusually large drop in one day.
yeah. Well, I mean, yeah, it was a couple days. Like it's been dropping pretty good, but yeah, that's a big one.
Yeah,
So that's 53. Yeah, that's 5 point drop there. It's just been pretty big.
that's
Yeah,
an 8 point drop.
yeah, 7 point.
Yeah.
Yeah. So yeah, it's been dropping pretty good. Yeah, I mean, it's not like we were so up high with these state ones. These are all just going into two. So it's just we still had a decent amount in eight, but these all have to, if it's gonna be like a big bearish cycle, all these we're up around 50 here, like these all have to work their way down, if it's gonna be some kind of big bearish cycle. So this right now it's just like a pullback, which is well overdue, since been going up since October, in October. So uh, yeah, but those were big moves. So I mean, we're right near that 30%, which is kind of like oversold pie wise. So
Question, Josh, for Sadir.
mhm.
Sadir, the magnitude of those big moves over a couple day period, does it suggest anything to you, foreshadow anything in the markets in your experience?
Well, I think that I haven't done any analysis on the magnitude of the moves. I know you've done quite a bit on, the different levels like 80 versus under 15 or whatever. But just eyeballing it, on the way up or on the way down, generally the high moves about 3-4 points. And so to have an 8 point day and a 7 point day, tells me there's a lot of weakness there and we'll see more downside. That's the way I interpret it, but I don't really have a study to back it up.
I think it's a very interesting point you bring up. We will try to do some analysis on those bigger one-day drops followed by another one, and maybe we can have some feedback on that based on the stats next week. But thanks for bringing it up.
Yeah, I just find I eyeball it every day. I track it in an Excel file, and these 8 point and 7 point moves are unusual.
Mhm.
Just eyeballing it. That's a big change.
Yep.
Yeah. Well, thanks, Sadir. Yeah, definitely. I mean, you can just see here the state ones, this last week's meeting, we're at 47 and it's actually crossed over, crossed below the state eights now. So those are at 27. So, a week it dropped 20 something percent. And those are all pretty much in state twos, but very sharp move, correctional type move. I think from here, let's just take out, from here, you can see the twos, from last week, 12 to 30. So, we're getting that initial push of twos. So what we, keep our eye on is the fours, or if, these things hold in twos. Usually, state twos are, a week to 2 weeks on average for duration. So, obviously this just went like straight up here. And we see that, in past, kind of mini corrections or down moves, these things pop up, kind of level off, and then, we see if we get the follow through or not. Um, this one, obviously, you can see the eights were, we didn't have a lot in two, but this time we had so many in one here. Before here, we had elevated eights. Those were already 30, so a lot of those sevens were moving. But now the majority are not in seven. We only got 3% left. So really, we're watching that front end of the ones, twos, to fours to see if this is going to extend lower and lower. So. That's what I keep on my eye on here. So, that just kind of, you can look on the front page, and this is a big number. I think it was like 240 something the day before from ones to twos. So, just kind of keep your eye on these, the fours, see if these things keep moving lower. That's what I'd be looking at here. Down here, obviously, yeah, this was last week. We're still, we were talking about these were kind of dying off a little and to watch for, this kind of transition. So that's what we got. So we had a decent spike here in lows, 244. Highs are dead. So we got 24 and 12. So another thing, just obviously keep our eye on, as far as the market, all the bad times happen when we're getting these low spikes. So, eights overall, we got enough in there. Well, let me pull some of these off. We got like 27% of issues in state eight. So that's where the lows happen. Outside of kind of earnings, horrible earnings reports. But so we just gotta, we got to flip over, just kind of monitor the lows and the transitions, and just we'll see where this thing stops. But we talked a lot about the levels, especially I'm just doing this real quick. Like that 20 got broken. We were talking about last week is kind of fighting a little bit, so pretty much broke, and then 50. You can see right below it that got broke. And then the same thing with the Russell, that the next, that was Wednesday, pretty much broke. So we were watching those levels, it broke, and I think that was our best guide, for these uptrends. This gave us a warning, it's like falling and then just boom, a couple of days of fighting that trend, and then it just flipped over. So let's see what else. Bullish bearish. We obviously had that cross. It's been a while since we crossed over. Bearish crossover. That's the last one here, like August. So you can see how violent these are, though. This one from 25. This is like a couple weeks to 70. So they likes to do this a lot. So we were kind of talking about this, like holding off around this 60 level seemed like support, and that just broke. Everything broke on pretty much last meeting. During our last meeting, things started breaking. So uh, we'll just have to wait and see, how how far the momentum takes us here. Obviously, I think we're down some more today. So, but I think the big before I go into the indices, this is, I think, the big driver, like above 4.5, and I'll pull up this chart from, you guys seen this over and over again. This is basically returns. So this is kind of like the 4.5 area. I think get sketchy as far as the returns in here start getting positive, negative. This is pretty much 5. So, as we get closer to the 5, it just gets worse and worse for stocks overall, as far as like yields rising and stuff. So, once you plateau and things start, this is just when yields are going up. So let's say like plateau, say like 7% or something, then this doesn't apply anymore. And, the rates start coming down. It doesn't apply. This is just when rates are rising. So, where the big damage is done. So, as always, kind of keep our eye on that 10-year. So, just as soon as we get over that 4.5, it's kind of, be leery. And the higher we go, the worse it gets. So keep your eye on that. All right. SPX, after a monster state one, that's November 14th up until I think that transition yesterday, 16th. Yeah, so up until the 15th, as monster run. Didn't make the all-time high move, but was fairly close. But state 2, since we're new here in this state, usually kind of meanders. They'll retest here, and then it's either going to pop up or down. Based off of probabilities, you can see those below. But that target 3 is usually critical. 1 and 2 not as strong in like a state 2, but you can see here about 2/3 of the time it'll go back into 1, and a third of the time it'll go lower. So obviously this has been a bullish stock for a long. You can see here number of days since 2007. Obviously it's been very bullish. So think that, that's where this stuff comes from, the historical probability. So I'd expect it to at least get down and, here's our entry, 50, 51. I'd expect it to at least try and test the targets here, but we'll see. So we broke the 20, we broke the 50. I think last I looked, we're getting near the 5,000 level. So that's kind of, let me get this chart here. So that's the bottom of our range. Top would be 5,400. So we topped out right around this 5,250 area. So this is kind of the next lower level down here. That's like 46. It's basically 400 point wide kind of segments, but so we're getting right near that 5,000. Obviously, if you're bullish, you want that to hold. And we had some resistance back here, and then finally broke and made a nice run. But we haven't really, since that breakout here, haven't really retested it. So this is going to be a retest of that 5,000. See if it holds, and you'll see what the market does here. Obviously earnings are starting to kick off, so that'll be a big driver, and I think rates and the other kind of factors, geopolitical, obviously what's going on with the Iran, Israel, that could turn into something more than just kind of a regional, in my opinion. But so there's that. Russell, so this went in on the 12th, 3 days in, already down, hit the first 2 targets. The bottom target here, 1946. So, if we look at here, across the bottom of the range is 1900, and that's pretty much right on the 200 day. So this would be the intermediate target, 1946, and then obviously bottom of the range is going to be 1900. That's right here, tops 21. So that 21, we talked about that a lot. That, it only popped over there a little bit, but that was pretty strong resistance again. And like I was saying with the rates, this is very rate sensitive. Kind of inversely reacts to rates. So if rates keep going up higher, this will get ugly. I would expect, just to test the 19. It held last time here, back in January. So that's solid retest here, and it's been going up ever since, but can't get over 2100. So, typical path. Whoop. Sorry, I don't know what I did. Yeah, sorry, hit the wrong button. So we've already made initial swoop, kind of typically would come back up and then test 3. And then, either up or down. This is similar to, it's only got like another week on average there. Similar to SPX, kind of 2/3 ish, goes back up. But, just kind of monitor, the key things, the pie, which way is that going, the transitions, and then the new lows obviously are, I think, very important to watch. So just gonna reiterate here. It's the top, here's the bottom. Obviously the next tier lower is 17. But we're right on, that 200's kind of right around that. So, but below that you got 1946, and we're kind of right near that target 3. So, this is what I'll be watching here. Just kind of see if things start kind of leveling out, and then kind of go from there. See if the momentum stops on this down move. But obviously, this has been a huge move. This from October, so no real. I mean, you got little miniature kind of, but always above that 20 days. So, and above the 50. So, those both broke. I think it's healthy. Obviously, you can't just go straight up. So, okay. Already talked about 10-year. It's been pretty much going up since that bottom here at the end of the year last year. So 4.2. So we were up in right around 4.7. So down a little bit from that, but I think anything over 4.5 is kind of iffy. Below 4.5, I think it's fine. But anything above 4.5 still kind of sketchy, and definitely higher is worse, I think, right now. Let's talk about the Fed. All right, so you got May 1st. It's only 2 weeks away. Nothing going on there. Nothing in June. July, still majority saying nothing, and this hasn't changed really at all since last week. You can see the numbers are pretty much the same. So first cut right now is September, kind of 4 point, and then December is pretty much 2 is the average, and these things didn't really move much at all. So since last week, and same with the balance sheet, didn't really do anything, kind of flat sideways sideways move there, so. All right, that was it for market. I'll open up to questions, comments.
This is Dave. I wanted to follow on to what Sudhir was mentioning for the move yesterday. Be kind of interesting to see if there's if you guys have the biggest pie chart change in a week kind of thing would be interesting. Just the green and the red, the odds versus the even states kind of thing for a week.
Yeah.
News can be short term. Some news is a little more persistent than other news, but what do we have between last week and this week that might reconcile some of the pie change? Well, we had bad inflation numbers last week. Then we had a really great jobs report, which you can argue how great or bad either any of these things are, but I think the consensus is that they're not good for rate cuts. Retail was down on Monday. JB Hunt reported last night, so transportation, that came in pretty terrible. So there's daily news that can dissipate, but then there's news pileup that can happen too. And with those are three pretty big significant moves from like Thursday to Monday, and it's going to be a headwind. And we're going to need pretty great earnings news to kind of turn around the quick pullback. Joe and I probably most of us have been thinking that we're probably overdue for at least a consolidation or a pullback, and maybe now that there's enough pileups on the bad news that which one was the straw that broke the camel's back, it's hard to say, but now there's enough to change sentiment. And we've gone from 6 rate cut projections early in the year to now maybe 2 or maybe even none. So, and that's one thing I've noticed the change is that there's no bulls pounding on the table for when the next rate cut's going to be here. Now there's, well, we don't know, and that's kind of a change in sentiment, if you ask me. So we're going to need some good earnings news, and with all the things that I just mentioned, it's going to be difficult for corporations to raise guidance going into the next few quarters with all that pileup. And I didn't even mention the geopolitical news that you talked about. So, I kind of thought we'd be sticky at 5,000 and not kind of hold on there. And I was wrong on that. We blew right through it. Now we might blow right through it on the way back because where's their support? I don't know. So I'm kind of a little bit now bearish where I was kind of like neutral last week. I think I'm going to turn bearish for a while. Just my perspective on all the news digestion, and some of it's going to be harder to overcome. Well, no rate cuts for the year, and there were 6 earlier. Well, then the market went up, except for the last week, all during that same period of time. Didn't make sense to me. But now I think people are starting to say, well, maybe it did go up too fast, too far, too fast, and we need some sort of a pullback. It would be cool, interesting to see the Fibonacci. If I put the Fibonacci up in the SPX, I think we're right now at the first fib level, not the first major one. I think the first major one on the downside is about 48.20 when I last looked at it. So, could that be a target? I don't know. It's hard to pick a target on the downside. We just had to see where earnings is. I hope earnings we haven't seen much earnings from the big players yet, so maybe that can all turn things around. Hopefully, but I'm a little pessimistic. I hope, but I'm pessimistic. So anyway.
Yeah, some of the banks came out. It's kind of like it's the wrong one. Seemed like a 50-50, type thing for me, on how well they did. Like Goldman did well, like BAC not so good. So yeah, that's just the beginning. I think we got Netflix. Sorry, I haven't done this in a while.
I think they're tonight or tomorrow on Netflix.
Yeah, I think it's tomorrow. Yeah,
I'll
there's
look
your-
and I'll tell you.
there we go. Yeah, so it's right below that 5,000. Yeah, so expect, yeah, some support in that area, but yeah, I think Netflix, I think it's Thursday. Yeah, this, where is it? They got earnings in here too on this page. Yeah. It's pretty awesome resource. So it's today. Nothing huge. Yeah, Netflix tomorrow. Oh, yeah. So we're just at the beginning of it. So, but yeah, obviously, I think earnings will drive things. You know, if they don't do well, they're going to get punished right now. So yeah, thanks, Dave.
Hey Josh,
Yep.
is there a way to pull up stocks that are still above 50-day with 90 relative strength?
The pull up, like, you basically have to go in the screener to run something like that. So EMA close greater than 50. And you can do all symbols, find stocks. What else? Above the 50 and what?
And 90 relative strength, the RS.
RSI?
No, not RSI, RS like IBD uses relative strength, right? Like stock charts use SCTR. The
Yeah.
top performing stocks compared to the index SPX.
I don't think we have that in our system. Here's the list of all the ones still above 50. Yeah, like here's all our what we have available. And we have RSI, all this, but I'm not familiar with what you're talking about. I got,
And I'll
I
send
guess,
it, I'll send it to you offline on that. Let's have a chat on that, yeah.
yeah.
And the second one is like you said, like the state one, right? How do you get all the state one stocks which are showing in the bar chart? The 24%, 24.84% of the stocks are in.
State one, yeah.
How do you pull those up? The same way, in the custom
Yeah,
screen?
yeah, same thing in here.
Okay.
So that's just under the state modeling. And you go in state model. So you can look for like transitions, you can like targets, hit next targets, all that stuff. So here you just do current state one. Yeah.
Perfect.
And you can do them together too. So above 50 and in state one.
On the contrary, how do you use this? This is really informative, the dashboard. How do you use this dashboard for the reversal? Like, suppose, imagine like the numbers we have discussed, like at 48 or 49, it found a support. So how can I use this dashboard to find the reversal when it's going back up?
The dashboard, this one, it's going back up. You're talking
Then,
about this one?
no, when the market goes back up right now, I think we're talking about like it might cross 5,000 and imagine it goes to 4,900, 4,800.
Yeah.
Goes for the reversal.
Mhm.
How do you spot that using these states and the market overview dashboard?
I don't know as far as like the dashboard. I mean, like you basically want, obviously this momentum to like stop, the red stop getting bigger. And then, you don't want them to start transitioning. At that point, you can, and the lows die off. That could, be an indicator that things may start turning around soon. But like while it's just kind of expanding this quick, you don't really want to do that, gamble against it. For here, these levels are just ones that we pull off the charts. The other things you can use are these targets. that's kind of the other things that I use, but a lot of these other ones are just, based off kind of visual, um, support and resistance levels that, I found, or, this Fibonacci, you can build these out, in the system. These are really good, um, finding out these levels in the system. So,
I can help with that.
mhm. Good.
Go back to the dashboard if you would, please, Josh.
Mhm.
Generally, what I see when things are starting to reverse is the green pie will start rising, and then the states of the major indices will go into bullish states. Like the reverse has happened recently. Green pie has been dropping. A couple days ago, we had the Dow and the Russell going to state 2, and yesterday the S&P and the Nasdaq went into state 2.
Right.
And when it starts turning around, the reverse will happen. Green pie will start rising, and wherever they're at, maybe we'll get to state 4 or 8 or whatever. The major indices will start going into bullish states.
Nice. So just an extra extended question on that one. Like right now, you saw the states like here on the left side, SPX, Nasdaq, RUT, and Dell, all are in state 2, right? So what is the probable state next? Where do I look for that? Because this was really nice. Because on April 15th and April 16th, I can clearly see that, and it was quite informative. And on top of it, the TLT, when it started on April 1st, it went into 8, I think. And that is when all the downturn started. Like we had the SPX at 5264, but since the last 16 days, it's going downturn. So what are the probable states for these indices after 2 for each of them? How do I look that? Or
Yeah, that's down here. This is based off of historical occurrences. So every time it's been in state 2, where does it go next? So it's 63%. This is for Russell. It'll go into state 1, 34%. It'll drop to 4, and kind of these other outliers. But in the S&P is similar, a little higher for state ones. But that's the historical probability of where it goes next.
perfect, awesome. So I should go to the state modeling and then click each index, and then I can come to this next expected state. Perfect.
Mm-hmm.
Thank you. This is awesome. Thank you so much.
Yeah, yeah. No, I think the other thing just to think about, like, all right, we're in 2, so if this is going to be a bullish, like longer term bullish, then we should be doing 1-2s, 1-2s. So it's been a long time since we're doing that kind of thing, 1-2, 1-2s. So just something to think about.
Is it on all the indices, the SPX2, Josh?
What's that?
Is the 1-2 back and forth on SPX2?
Yeah, I mean, for any stock, like if it starts
Okay.
doing 1-2s, 1-2s, that's like here. So it's like 1-2, 1-2, and then makes like huge, like that's very, very bullish. So any stock or index doing that, it's a very bullish sign overall. So basically, it's just making runs up, little pullback, and then coming. So okay, yep.
Thank
Thanks
you.
for the question. All right, we'll run through earnings quickly. It's quarter 1. I warned you. We have one in Volrise. That one's actually doing good. XPO. It's a nice down day. That'll be good for our vol. For our vol rise. So we came in 126, so it's down pretty good. So that should be a pretty good one. Hopefully hits target here. So that's the good news. These bullish runners and pre-runners are not doing great. Obviously, the market had bad timing, so ACN down pretty good. It's down like 20 points since entry, and then Goldman just came in, so that one's off to a bad
It's the
start.
curse of the first quarter.
Yeah, it is the last two first quarters. So yeah, similar here. We did close one out, Marriott. So we got one winner. The rest are not looking good so far. Obviously, yeah, we got time. This one will be closing out, but this one today. So some of these are going to be losers. So just be careful. I hope I warned you all the Q1s just to be careful. So we're back here again. So far, not looking good. But we still have a lot of other types of trades. But downturn in the market when all the bullish free runners come out just doesn't work out well. So, all right. Any questions, comments on that? All right. I'll hand over to Mr. Joe.
All right, Josh. Thank you. Hi, everybody.
Yep.
Let's grab a couple screens here. So, obviously, we have rolled over as Josh suggested. I tell you, my take, and Dave, just to follow up on your comments, about earnings. I think earnings, if this market is, going to have, this healthy correction off of a monster run count coming out of the October lows. If we're going to get another leg up, I think that catalyst 100% will be earnings, and time will tell. What really jumps out at me in terms of the home page, we have rolled over now from state 1 to state 2s, and it's the average length of these state 2s. Okay, we're only talking a couple weeks. And when I go to, the news reports really over the next week and a half, we got a PMI flash next Tuesday. We got PCI prices a week from Friday. The Fed is, the Fed governors are going to be, speaking quite a bit, but there aren't that many numbers in the next week and a half. So I'm really looking at this 2.5, 3 week period, just to see whether, we can pull back all the way to the, Fibonacci retracements that Dave spoke of. Here's SPX, and just like he said, it's right about 4,800, to take us down to the 3/8 retracement coming out of the October lows. That's a long way. We've already pulled back quite a bit from the, the highs. So, but it would be that 4,800 number in the S&P, another couple hundred points. But that to me is really the key, the next couple weeks to see how deep this pullback goes. Goodness knows we need one, and in the end, it would be healthy for the markets. We'll see. Once we've rolled over, and with all due respect to the indexes, if we remember, XLK was the first of all the indexes to go into state 1 day ahead of NDX, last October. So I just thought I haven't really done any analysis on, exceptionally long state 1s here, but still a super healthy looking chart, a little bit of a healthy pullback, and we'll see what the next couple weeks bring. But that was XLK. And there's that S&P, pull back in terms of the 4,800 level. We shall see. What I have done over the last little period of time is go back and look at, the extended state ones in the various indexes. As it turns out, SPX and NDX both had their fifth longest state one runs. The all-time in SPX was 135 days. This particular run came in at 104. NDX, was also the fifth longest. Its all-time longest was 144 days. This time came in at 109. Russell, certainly was in the top 10. Turned out to be a 78-day run. We remember, Russell was very late to the game. It was the eighth longest run in Russell. But what I wanted to do is go back, and going back to 2007, I wanted to see where the indexes, together had long state one runs. And there are really two periods that jump out. There was a period coming out of the financial crisis of September of 10 to March of 11. And I have all those charts for you. And then the period between, and it just happened to coincide with the presidential election of 2016. Really, we ran from November of 16 to June of 16. And then a couple months later, we jumped back into state ones and ran into them all the way out to February of 18. So they're the charts, I just want to pull up for you. The pullbacks after the long state ones in 2010 were quite significant. And, I think, we had the AAA rating, pullback in government debt back in 2011, if we're looking for excuses. So we got, very significant pullbacks coming out of the 2010 runs. But here are those charts. Here's SPX. Excuse me. There's NDX. And basically, I ran these charts through kind of the middle of April. So they're a couple year charts, but really just to give you an idea of, the length of state one and kind of what happened afterwards in the various indexes. Sorry. NDX and Russell, those pullbacks, in 2011 were, very significant. And then we get into the 2016, the presidential election, or the election that year was November 8th. And it's, I think the Russell index in particular really, we are, started to jump a little bit in advance of the election. And it was, shortly after that we had a run. But I'll just go back to, November through really November of 16 through February of 18, essentially you had a real monster run in all of this. And so those state ones, kind of foreshadowed market strength. There's your NDX and, the Russell, not as much strength, but, certainly not significant downside markets. So, in terms of the magnitude of the moves, they vary. I think, what's ahead for us in the next 6 months, earnings will sustain, but I got to believe this, is it a coincidence that, we had a couple year run coming out of the 2016 presidential election, and could that impact this November? Kind of thinking the answer to that might be a big yes. So, maybe our runs, if we're to have them into the election, are muted, and maybe that election is going to turn out to be really something very significant, from a market standpoint. We shall see. And then just, the financials are always important. We don't talk about them all that much. Energy's had a big run too. But I think, just worth keeping an eye on, none of these things have done anything near a 3/8 retracement. I personally think the markets are probably going to continue to do pretty well. And I think earnings will be the catalyst, but I think with each passing day, I think, the downward action in the market brings the bears out. I think that it's easy to build a bearish case. And of course, we've had big runs since October. So we've got a long way to go for healthy 3/8 retracements. And I think that's the thing to keep in mind. And maybe there's going to be a cloud over the markets really between now and the election. And, Josh has been talking about this 4.55% level for quite some time in the 10-year. Obviously, that's important. Inflation's sticky. But it'll be interesting. I just, are the highs in until the November election? I don't know. I'm kind of thinking maybe. But boy, if earnings are good and the markets don't rally into the election, I got to believe maybe we'll have a catalyst in November of 2024 like we had in November of 16. So open to any comments or discussion, certainly, but they're my thoughts this week.
Hey, Joe, this is Dave. I couldn't have said it better than you just did, actually. One thing to keep in mind, though, with the, let's say, not so great inflation news, that we do have a pretty darn good GDP, and I think the best economy in the world. So, it's on the upswing. So, what's wrong with that? It's a good economy. The consumers are consuming and prices are holding. But inflation is sticky. The supply, I think Powell came out and said that specifically. It's supply side inflation that they can't really deal with companies that just want to raise their prices, so they do. And it would be, I think, foolish if we have a strong economy, good GDP for a couple of quarters. Why would the Fed even tamper with rates until after the election? If they, then they can really be non-political, and they, as long as the economy doesn't falter and they don't have to cut rates because things are going, to hell in a handbasket, which doesn't appear to be the case. Current businesses are making money with the current level of inflation, if you ask me. I think the 2% target they're going to have to yield on sooner or later and say, well, maybe we don't have to get down to 2% for everything to be rosy. That's my take on where we need or don't need to go to have a successful economy. So, yeah, will we kind of flutter around up to the election? I think we probably will. And, maybe this pullback will come, will come to a little bit more pullback, but I don't know whether it'll get into a bear market. Things are just, corporations are just, I think, doing too well to dive down into a bear market. But after the election, if they cut rates then, or I think you said it, I don't know how many meetings ago, but it's the year after the election that the markets tend to take off, and that's what I'd be looking at too. So good points all around. There's nothing I would quarrel with that you just said, Joe.
Well, maybe next week.
Same thing here. I think the 48 number, if you look at SPX 8% correction, it is at 48.45, right? So after 5 months of such a bull run, I think 3 to 8% would be the normal correction. So 8% is 48.45.
Okay, thank you. And why do you think 8%?
No, I'm not saying like exactly 8%, but my view after this 5 months, like since I mean November to March, I was expecting this correction like between 3 and 8 usually. And as I think Dave said, like we are not looking at the companies doing really bad and going into the recession or something, but this is just the normal correction after such a 5-month move, somewhere between 3 and 5. Because yesterday, I think we were between 3.5 and 4%. And I think today, as we speak, like we are at right now at 50.34, which is between, like close to 4.5% correction. And I think from the beginning, as we have all discussed, like related, I mean, just a coincidence between the fib level and then this between 3 to 8% correction. And the 8 stands at 445, but somewhere in between that is a good number, I guess.
And of course, for the market to be healthy, we need corrections. And
exactly, that was my whole point. Was after 5 months, like after such a bull run, and I was tracking very close since April 1st. If you look, like they have confused so much, like especially I think there were some candles. If I can pull up the chart quickly, the big moves I think were on. If you look at the candles, 1 second, I think on April 4th, and then like it started on April 11th and April 15th. So apart from that, they were like up and down, but I think if you see the daily candle since April 12th, it's going down.
Okay, the chart I have up here is locked. Thanks for your comments.
No, thank you. This has been very helpful, especially the dashboard and your both of your feedback and the group's feedback is pretty helpful. Thank you.
You're welcome. And one thing, we talked about how strong energy had been recently, and really since January up until recently, that had been, a big part of the market up move. I think if we're to have kind of a sideways choppy market for a period here, I think one thing for us all to try to think about is if we break out, where will the leadership come from? And, whether it turns out to be XLK again or, some other area, consumer cyclicals, we'll see. But I think that's something I'm starting to think about, where will we get, the market leadership?
Also, do you mind covering about TLT states, like how you have seen in the previous transitions? Do you mind talking about TLT a little bit?
Which transitions?
The TLT, the bond, the TLT.
Oh, TLT. Yeah, TLT actually, it has been, gave a heck of a good state 8 signal, some months back.
Exactly. I was looking at that, like some months back it hit 8, but it didn't do it. I think it didn't do. And I think again on April 1st or 2nd, it hit 8, if we can check that. And let's see if we can just talk about the expected states on that one.
Our 20 seconds is almost up, Josh, pulling it up. We will be working on platform performance. You've heard us say this like a broken record for some period of time. We're hopeful in the next couple of months, platform performance will improve markedly. That's our hope. It was that big 8 kind of last June that we got. That was an awful good signal. And what are the numbers? We're 25-day average, a 27-day average. It's just my perspective here is just, it's worth watching. We haven't talked about it in a while, but some issues are far better than others in terms of state modeling. And, you can see here over the last year, we got the one good 8, but the signals have been pretty choppy. So I just personally try to stay aware of what signal it's in, look at the chart itself, certainly, where is the chart, and just kind of take it from there. So Josh, your thoughts, TLT, or?
Yeah, I mean, it's down near the third target, a little below, so that's usually, if that turns into like, let me do the tool real quick here. Where's my tool?
Want me to turn it back to you?
It's
Screen?
fine. Yeah, so like if this turns into resistance, kind of like the opposite of state 1, like if it can't get above this, then it could really tank. But if it fights here and gets above, then you would kind of expect it to go back into 7 eventually. But that's kind of what we, on the opposite side, the ones when it gets above that target 3 and it, tests the support a few times and then it, basically turns into support, then it can really run. So it's the same thing on the downside here. So just kind of watch that level, see if it gets above, gets back above that. If it holds for a while, it could, really this is rate driven. So, if the rates are going higher, this could go a lot lower.
Can you scroll down a little bit, and Josh, can you talk about that expected move, like similar to SPX? What state does it go mainly? Like if you scroll down a little bit on that expected state, it's in state 7. Okay.
Yeah, if it's an 8, it's pretty much going to 7. And if it's in 1, it's pretty much going to 2.
Okay.
Yeah.
So
Yeah.
if it is an 8, it goes to 7. Okay.
Yeah.
And this looks like pretty much it goes to 7, 95%. That's interesting.
Yeah.
Thank you so much. It's helpful.
Mhm. Okay. Yeah, that low was probably right when we hit that 5% on the 10-year. Yeah. Anyway.
Josh, just there, like, see that in Feb from S8, it went to S5. So is that 1% probability if you scroll down? Because we thought it was 95% to S7, but from Feb it went, oh, it's 3%, but so it was a 3% probability in Feb.
Yeah.
I think that is which was confusing in Feb and March, because that's what I was actually checking today morning and last night.
Yeah, so it matters so it was an 8 back here in October, right? And all the way
Yeah.
from like July. So from 8, it's most likely going to 7. From 7, it's most likely going to 5. And from 5, it's it's either 1 or one of these other kind of, that's kind of a toss up, once you get into like the middle states, like 4, 5, 6, even 3. But all that you can go back in time, the time machine up top, and look at those previous state occurrences. Like you can go back and look at the 7, any date you can go back and look at them.
Sure, we'll check. Yeah, this is very addictive and interesting too, so I'll check it. And it skipped the S7 and Fib to like the Fib and all that. It went to S5 directly. But I think as we are talking, I think with all the scenario, maybe it might hit S7 this time. Let's see.
Yeah, yeah. I mean, almost always.
Thank you so much.
Yep. All right. Good questions. Anyone else?
Say, yeah, Josh, I wondered if you just put up the Apple chart for me, would you? Just I look at that just because it's like still the most widely held stock, and I'm not drawing any conclusions to or from it, but it's an interesting chart to see where it's come over the last year. So
I remember I was watching it. It's down near 170, kind of holding there.
Yeah,
they're kind of at a support level now, and again in like 2 weeks, I think that Friday, not this Friday, I think the next Friday, the 11th or whatever, is is kind of like where most of the leaders in all of the sectors have chimed in with earnings, and it's kind of like where I figure my next quarter is going to go. I look to see what might happen with Apple to be a portend of like the next quarter for a lot of tech stocks. You know, I've kind of expected the buy the dippers to come in more than they have. I'm a little surprised that they haven't yet, but we're still like
Yeah.
almost a week and a half away from our earnings. So we'll see. Maybe that'll still happen. See.
Yeah, I mean,
Buy the
there's
dippers.
definitely a level to watch where it's at right now. I mean, you can draw lines pretty easily and see, we were looking at that, when it first kind of was down there here and then, popped up, came right back down. So, this kind of level in here, below that, you can probably extend it back here. So below there, could pull back, but yeah, to see how these things, what state it's in, what state right now, Joe?
What's that, Josh?
What state is it in? 8?
Yeah,
Oh, wow.
Yeah, it's in 8.
it is.
Yeah.
It
So
is.
you see the battle here at the entry price. So, is this support or resistance? Like, it's a battle. Obviously you have resistance and then you have some support down here, but it's just like a battle. So right here, so not sure which way it's going to break. It's still, that's kind of right at that level we were talking about, the 170. So go ahead, Joe.
Dave, were you talking about buy the dippers in Apple coming in or the market generally?
I was talking about Apple specifically
Yeah.
because
Okay,
you
yeah.
know, because it's been down so much. It's like earnings is coming up. There's usually a bunch of services are going to save the day for Apple, even though it has some other headwinds. But I haven't seen a lot of talk about that yet. But it's like you said, it's one that I watch with interest. That's all. Not saying
Yeah,
a
and
good thing to buy or good thing to sell. I'm just saying it's a good thing fun thing to watch. Put it that way.
I think Apple is big time out of favor. And I think the chart speaks to it. I think the fact that it topped out, basically in July of 23, speaks to how much people don't want to, put their money in Apple at this point. I think, they don't have enough of an AI story, and I think it's reflected in the charts. And I think it will, unless they change something fundamentally, I think Apple's going to continue to lag big time. And, whether we hold the level that Josh just pulled up remains to be seen. But yeah, I'm not at all surprised that there haven't been buyers coming into this thing, because I don't think it has, the story that's been leading the market. But to your point, it'll be interesting to see what happens with earnings, but I think it is big time out of favor.
And Josh, in the chat, I put some interesting thing, like over the last 7 months, about 9 news article headlines, which I put it in the chat.
Yeah.
Zoom chat, and it's pretty interesting. I think the only positive news was the AI chips. That is when they had a small, those green candles up there, like when they said, like, we're not doing the car anymore, but the next big thing is like the AI chips.
Yeah. I know they've been having problems in China too, like the consumer.
That's right. Yep.
Yeah, I was checking the percentage of the global smartphone market share. I think Samsung was at 20.8, Apple was at 17, and Xiaomi was at 14. And yeah.
All right.
Thanks, Dave.
Yep, thanks. All right, anyone else? Questions, comments before we wrap up? Appreciate it, Joe, and all the good questions here. Okay, we'll wrap it up. Do it again next week. Thank you all.
Thank you.
Thank you, guys.
Thank you.
Bye-bye.